So the second biggest change in budget 2026 is this charities and not-for-profit entities. So what changes have been done for charities and not-for-profits? Be with me for a few minutes. I'll let you know this is going to happen. So basically what is being changed, I have put all these into 6 categories. Category number 1 is donation credits. A cap would apply from 1st April 2000 and 2027. So this is the cap. The new cap is $100,000. So $100,000, if you donate more than that, you can't get donation tax refund on anything more than that. Smaller not-for-profit entities who have a tax-free threshold of $1,000 before, and that hasn't been changed for last 30-40 years. So that threshold is being changed to $10,000. Non-resident charities, so these are charities who are registered outside of New Zealand. These sort of entities were tax exempt in New Zealand. What we are saying is that kind of exemption is no longer applied. There are about 500 charities come under that category. Subscription and levies, if those small organization, membership clubs and societies and them, they've been charging the subscription and levies, so that membership funding for taxable not-for-profit entities remains non-taxable. So basically some change was being happened, and that would have triggered that to be taxable. So they have specified clearly that that change, even if that change happens in the legislation, this change will not be affected. So they have put this, that this remains non-taxable. Even legislation is changed to affect some other part of the not-for-profit entities. Return filing, eligible smaller not-for-profiters not need to file tax return unless requested. So these people who have a threshold requirements to be met, they do not file a tax return. And trust allocation, this is the main thing. A private trust, discretionary trust, if they distribute distribution to tax-exempt beneficiaries, that has to be done within a certain time frame. If that time frame is lost, then that distribution cannot be done. Now, donation tax credit. So this is number 1. This will be kept to 33.33%. So if the donation is $100,000, so which means the maximum donation can be claimed is $33,333. This is what can be claimed. This is applied to 1st April 2027 onwards. So remember one thing, it doesn't apply from this year. So even though you make bigger donation this year, yes, you can. This will apply after 1st April 2027, which means the application of that might be in 2028 year. You might see bigger donation this year, because if someone has to pay a donation, they might rush through to the donation, and you might see a lot of donations being done this year because there is a cap coming up. So it could be millions of dollars coming in this donation this year. Why there is a cap? There is a cap mainly to ensure that if the donee organization are controlled by the donor, so they don't get a benefit. Example, if I'm controlling the donee organization myself and I donate $1 million there, I'll get $300,000 roughly refund back to me, which I can use it, and then I'll use my $1 million anyway. What it's controlled by me, by buying a car or something. I don't know who's doing it, but there might be some people doing it. So that's why they have closed that gap so that no one can do it. Who's affected? According to the tax department, about 350 donors will be affected who have donated more than 100,000, which is a very small percentage, 0.1% of people. So the gap is pretty narrow. People, what they're trying to do, they're trying to close any loophole, if there is any, they're trying to close it so that no one can use it. Other major thing is from 1st April 2027 for most taxpayers is the membership subscription and levies received by taxable not-for-profiters would remain non-taxable. So this is, I already mentioned that. and this is current threshold is $1,000. So if small organization where the profit of that company is only $1,000, that is being changed to 10,000. So this is again from next year, 2027-28 years. So that threshold has been lifted to $10,000. Now, filing obligation and RWT exempt information. So return filing exemption and interest income reporting. So IRD will be doing more monitoring and reporting of IRWT exemption certificates to the Inland Revenue. Already mentioned non-resident charity exemption. Currently, non-resident charities can apply for income tax exemption on New Zealand source non-business income. Now, I do not understand why do we even have this sort of feature available if someone is a non-resident charity who operate overseas. Generally, these are countries USA, Australia, and UK. Let's say some churches are there who operate here in New Zealand and they have exemption here in New Zealand. Well, it shouldn't be, because the intended profit is not in this country. So why New Zealand sourced income is being untaxed? It was a loophole that's being stopped, which is a good thing that's being done. The government says, again, there is a small number of entities. We're not talking about large number. Only 350 entities might be affected, and they don't even know how many of those entities will actually have New Zealand sourced income. It might be very limited number, because this was exempt, so they never got the reporting of it anyway. So they don't even know if there is any one using or misusing it. But again, the idea is to close the any loop hole. If there is any problem in the system, they're trying to patch it up so that no one can misuse it, such as donation tax credit, 100,000. It does make sense. Who donates more than $100,000 a year? If you are donating, there might be some hidden agenda, some hidden objective there that we are unaware of. So it's a good that loophole is closed. The last thing is trust allocation to tax-exempt beneficiaries. That applies to 2028 and 29 year. So if not paid within the certain time frame, that will become not distributed. So if you have done accounting entries, that will be rolled back. Showing an example. Basically, example is $200,000 allocated but not paid. If not paid within the required date, I think it's 6 months, that 200,000 would be trustee income and will be taxed at 39%. So if, example, you're distributing $200,000 to exempt beneficiary, if it's not being done on a specific time, then we're talking about 39% tax. It's a $78,000 roll. So if I'm an accountant, I made a mistake by not filing it on time, a client might come back and bite me that, no, $78,000 bill, I wasn't expecting that. So this is a major thing. Now, this is a 6 months, that's the payment date that's been put through. This is, yeah, so tax agent normally file tax return on 31st March, year after the balance date. So if year is ending on 31st March 2026, right, tax agents normally file the tax return on 31st March 2027, but that has to be done by 30th September 26. So that's the 6 months what they're talking about. So if you have that sort of feature, you be on top of it, because you are the one who will be burdened with that $78,000 tax bill. Okay, so that's about it. Thank you.